Hey, it's Aaron. In March, Robinhood filed for an IPO, but Bloomberg just reported this week that Robinhood is going to release that critical S-1 document sometime the week of May 24th. This document is going to show everything that's going on under the Robinhood. It's going to show financials, business risks, outlook, customer growth. All these things are so critical in assessing is a company worth investing in. So in this video, I'm going to go over some preliminary things that have come out, and also going to go over some things that we should be looking for once the S1 is revealed. These are the things that we should look at primarily to understand, is Robinhood an amazing company that we all think they may be, making a ton of money, or is there a house of cards situation? There's potentially a lot of money that's going to be lost. And I'll be detailing what Warren Buffett and Charlie Munger, the world's greatest investors, have had to say about Robinhood and its upcoming IPO. It was, let's just say, direct feedback. So go ahead, smash that like button, and make sure this video gets shown to more people like us who want to have the best opportunity at building wealth and investing in these unicorn tech companies when they go public. All right, let's take a look at the Bloomberg announcement. Robinhood Markets Incorporated plans to reveal filings for its initial public offering as soon as next week, as the trading app targets late June for its market debut. So it's coming up in a few weeks. That's pretty awesome that they want to go public in the summer. I think part of that is being driven by the markets are really inflated. Some people say we're in a bubble, and that means companies with really high valuations that are private, if they want to go public, the time is now. Because if the market crashes, it's not going to happen. And that means that their own private market valuation could be affected if the whole entire tech sector and market just comes crashing down. So really, this is the time to get out into the public markets. And we'll talk about that a little bit more later, but it could affect retail investors adversely. So the other interesting thing through all my reading is that it's being described as a traditional IPO and not a direct listing. And I think that's really good, at least for us retail investors, because it's another little thing that we can put in our favor, knowing that there will be more support on that first day of trading from the investment bank or the underwriter that is helping Robinhood go public. And the reason why is because they want to prop up the stock, because they just sold that stock to a bunch of wealthy investors, and the first day they don't want it to plummet. So there will be some support, but it doesn't mean it's going to be going up forever. It's just one tiny little thing that's in retail investors' favor. I did a separate video on direct listings versus traditional IPOs in the context of the Coinbase direct listing and the whole disaster that was. But so far, this means I think Robinhood has a slight pebble of advantage for its stock going public in the fact that it's a traditional IPO. Now, I imagine they would want to do a traditional IPO anyway because they want to raise capital during this going public process, because they really need to shore up their balance sheet for future growth, but also I think for, they're developing their crypto trading platform. They're hiring like crazy for that, but also they want to make sure they have cash on hand for those capital requirements that could be imposed on them by the Depository Trust Clearing Corporation. If we look back to the whole GameStop fiasco in the first quarter of this year, oh my gosh, they can't have another call against them where they have to shut everything down and traders can't trade because they can't meet the capital requirements for the clearing of all those trades. So I think them raising some additional capital via public offering would probably be a great idea. We'll get to know the exact range of what they're trying to raise once that S1 comes out. So it's going to be really exciting. So Robinhood's last private market valuation appears to be around the $40 billion mark. So the really interesting thing to look for once that S1 comes out is how are they valuing themselves upon a public offering? Typically companies will like to go for a higher valuation when they go public because it's something known as a liquidity premium. Yes, as a private unicorn tech company, maybe you're worth $40 billion, but the employees and the investors can't just sell it on the open market, right? Because they're private. So now they have that advantage of being able to sell, and people and traders and investors from the public markets have the advantage of being able to invest. So there's a liquidity premium, and I think that could juice the valuation a little bit, but it, again, depends on the financials. There's a lot of stuff in there that could maybe say 40 billion is too much. So that's one of the first things we want to look out for, is how the financials are driving the valuation and what they're trying to get from us, the retail investing public. And in regards to diving into those financials, we want to look at the key areas that they make money. Now, we know Robinhood doesn't charge commissions for trades. That was their first value prop right out of the gate when the company first started. But how did they actually make money from that? Well, they took that order flow from all of us trading and they're able to sell it to market makers, specifically one of the biggest ones, Citadel Securities, but they sell that order flow. And this is an issue because the incentives are not aligned. If there's pay for order flow as a model, then the incentives aren't there for Robinhood and their market making partners to get you the best price if you're submitting a market order. That's why I always advocate for limit orders, by the way. But in a market order that comes in, the market makers seek opportunities to create a spread. So if a stock is trading at $100 in the moment and your market order comes in, if they see somebody who's willing to sell it for 99, they'll go ahead, buy it from them 99 and sell it to you for 100 and rip the dollar in between on all the shares. And that happens over and over and over in high volumes, hundreds of millions of shares a day. So there's a lot of money at stake. That's why Robinhood in the past has made so much money from selling order flow. And that's why we're really curious to look into the S1 to see how much they're truly making from that line of business. But the other things that we want to find out are, where else are they making their money? Is the crypto platform actually making any money? Is it a loss leader? Just to get people onto the platform so that they can have more variety of things to trade, but really hoping that once you're in there, then you're going to trade stocks and they can generate more order flow revenue from your trading activity. Next, we want to see what margin loan volume and activity has been like. It's a really big component of all brokerage firms where they lend money to traders so they can trade with borrowed money, and they pay interest for that. So definitely very risky because they can take on positions that suddenly decline so much in value that not only does the trader lose money, but the brokerage firm loses money. So Robinhood is going to take on some risk here, but it'd be very interesting to see the detail of what they are actually going to show us in that S1 filing about how much has been lent out, what default rates are, and how much revenue is being earned from it. Next, user growth. The S1 will give us an update on how many users they currently have. As of 2020, they had 13 million users, and it was said by Forbes that they added 6 million additionally in the first quarter of 2021. That's crazy. So they have up to 19 million users and potentially even more. We'll find out soon enough. But that's a high number, and we'll hopefully get more information about what the churn rate is like, what percentage of accounts are funded, and how frequently those accounts are trading. Regarding the timing of this IPO, again, as I mentioned earlier, the market, as many people think, is in a bubble, so they really have to go to market soon, or else they're gonna miss their window of opportunity to get a really great valuation. Because if the market comes crashing down, they're not going to be able to justify the $40 billion that's currently being floated as the valuation for the IPO, which is a crazy number because just in September of 2020, the private market valuation was $11.7 billion. And then looking at some of the trading in the private market, it is where that $40 billion number came from. Granted, that's not every person selling those shares. It's just from some trades of Robinhood shares in the private market. Those price levels then give it a valuation of $40 billion. So it still remains to be seen what the exact valuation will be, but we know that Goldman Sachs was talking about taking them public when they first announced the possibility of this in October of 2020 at a $20 billion valuation. So a jump from 11 to 20 is already pretty big, and now they're going to double that. To me, this is a sign of they're just going for the jugular. The markets are frothy. They want to get the stock out in an IPO as soon as possible so they can sell at the price that they want. So just remember that. And the ultimate question now is, when Robinhood is public, based on what happened with the whole GameStop fiasco, and they had to stop trading in GameStop and many, many other stocks due to, they said, there were some clearing requirements that they couldn't meet. So in order to basically not have the company get drained of cash, they had to stop trading access for their users. Would they ever stop trading access for their own stock? Super interesting question. I think it's a function of, will they have the technological and capital infrastructure in place going forward so that they never have these types of issues again that GameStop caused? But it would be interesting if one day they did have to put halts on other stocks and maybe a very turbulent market environment, but not theirs. I think that would be a very interesting thing. But $10 says that they would have to halt everything, so they would get only a little less scrutiny. And what do some of the greatest investors of all time think of Robinhood? Well, Warren Buffett and Charlie Munger weighed in at the Berkshire Hathaway annual shareholder meeting when asked about Robinhood specifically. Warren Buffett said that he's excited to read the S1 and excited to see how it all turns out. He also said he's interested to see how Robinhood describes its source of income in the S1. Again, going back to that whole pay for order flow dynamic, he wants to see how they describe that. And he said there's nothing illegal about it. There's nothing immoral, but I do think you'd build a society, but I don't think you'd build a society around people doing it. So he was a bit more indirect, but his business partner, Charlie Munger, famous for being very direct and going hard in the paint and saying exactly what he wants, kind of laid into them. When Charlie Munger responded, he said that Robinhood is god-awful, that something like that would draw investment from civilized men and decent citizens. It's deeply wrong. We don't want to make our money selling things that are bad for people. Now, Charlie Munger also said at a separate event some even more harsh words. So the 97-year-old investor, speaking during a question and answer session at the annual meeting of shareholders of the Daily Journal Corporation in LA, responded to a query about the recent run-up in shares of heavily shorted stocks like GameStop. That's the kind of thing that can happen when you get a whole lot of people who are using liquid stock markets to gamble the way they would in betting on racehorses. And the frenzy is fed by people who are getting commissions and other revenues out of this new bunch of gamblers. And of course, when things get extreme, you have things like that short squeeze. It's not generally noticed by the public, but clearinghouses clear all these trades, he said, and when things get as crazy as they were in the event you're talking about, there are threats of clearinghouse failure, so it gets very dangerous. So I think that's why he's saying that Robinhood is so dangerous because, as Robinhood has been accused in other times and other venues, news media outlets, that they gamify their app and they make trading seem too fun, and it makes you kind of forget about the risk. And so once you start playing with real dollars in this real market, if you're not really tuned into the risk, you're going to get burned, which is what happened to a lot of people a few months ago during the whole GameStop thing. And that's what Charlie Munger, I think, is referring to. So both of these famed investors probably will not be jumping on the Robinhood app to trade any stocks anytime soon, but it's an important context I thought I'd bring up. Additionally, Charlie Munger said, it's really stupid to have a culture which encourages as much gambling in stocks by people who have the mindset of racetrack bettors. And of course, it's going to create trouble as it did. And then he went on to say, and I have a very simple idea on the subject. I think you should try and make your money in this world by selling other people things that are good for them. And if you're selling them gambling services where you rake profits off the top, like many of these new brokers who specialize in luring the gamblers in, I think it's a dirty way to make money. And I think we're crazy to allow it. So, very direct words. And Robinhood, of course, did respond saying, it's too bad you feel that way. It's not fair. The wealthy elite have controlled the stock market. We're giving the masses an opportunity to get in on the game. But I think Munger does have a point that maybe some of the things weren't accurately disclosed in the early days of Robinhood. And one final Charlie Munger quote, when he was asked in a separate Q&A about whether he still identified wretched excess in the financial system, and asked where he saw the excess as most egregious in the current market, he said, it's most egregious in the momentum trading by novice investors lured in by new types of brokerage operation like Robinhood. And I think all of this activity is regrettable. I think civilization would do better without it. Ooh, okay, so tell us how you really feel, Charlie. So those are some of the thoughts from the world's greatest investors, but in the grand scheme, it may not actually matter. Robinhood's IPO could still pop on the first day. But I think their comments have more of a implication for the longer term performance of the stock. Finally, can you buy Robinhood's IPO on the Robinhood app? According to Reuters, the answer is yes. Sources have told Reuters that Robinhood will set aside some of its own shares expected to be floated in a blockbuster debut for sale on the platform. This will be their newest feature coming into play here called IPO Access. So they will hopefully be selling their own shares direct to their users, which would be very, very in alignment with their mission to democratize finance. So hopefully they do that with their own IPO. Those are my thoughts on the announcement that Robinhood could potentially file an S1 in the next week. I can't wait to read it for you guys. So if you like this video, smash that like button. If you don't like this video, smash that like button, and it'll go ahead and show this video to more people who want to understand what the heck is going on with Robinhood and their newly announced IPO. So I look forward to seeing what you guys have in the comments. Let me know what you're looking for and what you hope to see in the S1. All right, talk to you soon.